Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, we have a lot to digest, including Nykaa's second quarter earnings. But before we get there, let's take a quick status check on how the market is behaving at this point of time. And clearly, we have not been able to stage a great fight against that 18,200 resistance band that Santo had been so particularly talking about. There was a little bit of profit booking that crept in. During the day, we saw the index fall from about almost 1% higher to almost 0.3% higher. But lately, we have seen a little bit of recovery happening. That said, there is a little bit of caution in the market, given that tomorrow, of course, we have a policy update coming from the US Federal Reserve. So that, of course, is on everybody's mind. Apart from that, if you look at global cues, the Asian stock market was really buzzing in trade today on rumors, it seems, or buzz that China is going to set up a panel to look into reopening, the entire economy. It seems like Chinese government is trying to shift away from its draconian, COVID zero policy, which has had impact all across the world. Apart from that, if you look at the broader end of the market, the small cap space was lagging behind. It is continuing to underperform its large cap and mid cap peers at this point of time, Santo.
Well, if CJ had his way, indices would be racing one way up and taking out major resistance levels almost every other day. Patience, man, CJ, patience. The last steps, while climbing a mountain are always the hardest.
Yes.
So, and that said, there's a fair bit of caution also in the market, which then gives hope that probably you could see the market scaling those previous resistance marks, because when there is caution, usually it does happen that market tends to climb higher rather than when just about everybody is bullish on the market. That said, it does look like momentum will take the Nifty past the 18,200 mark. Now, in the NSE SLBM segment, we are seeing build up of short positions in City Union Bank, close to about 1.6 million shares of outstanding short positions there. And Crompton Greaves and Bajaj Finserv both are seeing a build up of close to about a little over 1 million shares each. In the derivative segment, we are seeing build-up of short positions in Axis Bank, Ashok Leyland, M&M Financial, and NMDC, which had been taking quite a bit of a pounding over the last few days. That stock has seen some bit of short covering.
Yeah, absolutely, CJ. Santo, sorry.
CJ, my God.
Sorry.
This is narcissism, I would say.
Well, my fault, of course. But that said, I think a lot of individual action has been happening throughout the past few weeks. We have seen, of course, a lot of this is because driven by the earnings that have been coming out, and generally during the earnings season, you end up seeing a lot of stock specific action instead of a lot of sector driven action. So clearly, I'm not really surprised by the the build up of position that we are seeing in the SLBM. But of course, a lot of these stocks that are seeing short build up at this point of time could be candidate for short covering in the coming days, given that the SLBM segment's expiry is also nearing on Thursday. So be aware, there could be a short spurt in a lot of the stocks that Santo had mentioned. That said, Santo, let's quickly move on to some of the stocks that caught our eye today during the trading session.
Well, starting with InterGlobe Aviation. Now, typically during this quarter, you see activity in aviation shares. That's because the holiday season is always good for the aviation sector, but this time has been slightly different. And according to a report in the Mint, the aviation sector in general is facing a supply chain problem, and which is leading to a shortage of spare parts, engines and aircraft. And according to the same report, almost 35 aircraft of InterGlobe Aviation, which is about 12% of the fleet, is currently grounded because of the supply chain issues. Besides that, we are not seeing any visible softening in crude oil prices. Also, ATF prices at Delhi have been increased by about 5,000 rupees per lakh kiloliter. So, clearly very little relief for aviation sector in general at this point in time. And lastly, in the case of InterGlobe Aviation, there is also the overhang. Ex-promoter Rakesh Gangwal, he's been slowly paring his stake in the company, and because of that, there is supply available, and the bigger investors are therefore biding their time rather than going and jumping straight away. Otherwise, this would have been good time to generally load up on aviation stocks from a short term perspective, but that's not happening. The stock bottomed out around 1550 rupees, but has been struggling to sustain above the 1800 rupee mark.
I think, Santo, for me, the high flying days of aviation stocks that we had seen probably earlier this year are clearly over. I mean, yes, there are individual concerns with respect to InterGlobe, but even on the fundamental side, on the business side as well, I mean, concerns are clearly rising over soaring ticket prices at this point of time that could possibly impinge on travel season demand. I mean, there are instances, anecdotes, people have been deferring their travel plans, or at this point of time, looking to utilize alternative means for transportation because ticket prices, especially on the less frequent sectors such as your tier 2 towns or tier 1 towns, I think their ticket prices being so high is clearly affecting demand at this point of time. I'm not so sure where the volume growth expectations that the market has from InterGlobe and some of the other aviation sector companies, where that is going to flow through from. That is clearly a puzzle to me. Apart from that, as you mentioned, Santo, fuel cost is something that everybody was expecting that with global crude oil prices falling, that will benefit aviation companies, and with the hope that ATF prices will also come down. But we have seen so far that ATF prices are not behaving in the same way that global crude oil prices are behaving. OMCs at this point of time seem to be very reluctant to cut prices because they also have to recover a lot of the losses that they took when crude oil prices were much higher and they were not raising prices in the same at the same rate. So I think the situation that seemed so rosy for InterGlobe 6 months ago has now totally turned around, and it's going to be a difficult or a turbulent ride going forward.
Well, yeah. Your stock.
Well, first stock on my radar today is Nykaa, the stock that we want to talk about the most. And well, after a 35% fall in the stock, if a company comes out, with earnings like this, I think it's almost a slap on the face of the market. Because if you look at the performance for the second quarter, it has basically proven all the skeptics or the pessimists out there completely wrong. Q2 revenues, and I'm only giving you sequential numbers by the way, Q2 revenues jumped 7% on a sequential basis. On a year-on-year basis, the jump was almost greater than 40%. PAT, although it declined 9%, it was largely due to higher depreciation cost on a quarter-on-quarter basis and higher finance cost. But if you look at it from a year-on-year basis, PAT jumped many-fold on a year-on-year basis. But the most important and the major highlight of this earnings performance, Santo, is the operating performance. And nobody saw this coming from Nykaa. A 33% sequential jump in consolidated EBITDA for the company. Margins also jumped almost 100 basis points in the quarter to 5% in the June quarter. Contribution margins from the beauty and personal care segment jumped almost 600 basis points on a year-on-year basis. So clearly, the company was able to ride the festive demand and the reopening demand, and that is also visible in the gross merchandise value, which jumped 45% on a year-on-year basis. And I think this is one of the reasons what I was saying, that in the short term, the fear of the share sale from some of the pre-IPO investors that was driving down the stock price, I think this would have created opportunities for the savvy investors out there who probably would have seen that the earnings momentum is still there with the Nykaa, the business model is still there, the argument is still in favor of this company, and I think the Q2 earnings, Santo, clearly proved that.
Well, CJ, the decline that we had been seeing in the stock over the last almost couple of months now, partly I think to some extent they could have been due to some of the smarter investors preempting this expiry of the lock-in period for pre-IPO investors. So that's why you've been seeing the stock not really participating in the recent rally. And now that you're seeing the news everywhere, almost every publication has put that thing out, that 88,000 crore worth of shares of these recent listings to hit the market. And now, I think now is the time probably that those investors who had sold early on might slowly try to cover up their position.
Basically you buy when there is blood on the street. Basically.
It's not even blood on the street, it's that now even if the pre-IPO investors were to come and sell the stock, probably you would have these early birds, the ones who sold early, now trying to cover back their positions. And remember, there's a certain template now set in the market. People have seen how Zomato crashed from 60 to 40 and then
came back almost 65.
Then came back to about 60, 65. So everyone out there in the market now is waiting and hoping that there is a similar correction in Nykaa, Delivery and other PB Fintech is the other one, and Paytm is the other stock. But usually what happens is when everyone is waiting for the same event, that event rarely plays out. We have seen that quite
and I think surprising, Santo, if you remember at the time of Zomato as well, when the pre-IPO lock-in had ended, the IPO lock-in had ended and the stock crashed till 40. When the June quarter earnings came out, the company gave surprising results. Nobody saw that the food business, would break even on the EBITDA level. And I think that took everybody by surprise and also contributed to a lot of the, the rally that we saw. And I think in similar vein, probably Nykaa's second quarter earnings could also contribute to a similar rally. You have already seen that in the past 2 days. The stock has almost risen, I think 15% in the past two sessions, 15 to 20% in the past two sessions alone, probably on anticipation of a very strong, numbers for the second quarter. And I would not be surprised that even when the massive load of shares do come into the market, they would be absorbed pretty soon, even though there could be short-term correction in the price going ahead.
Well, CJ, as for the earnings part, you've been going on and on about it. I'm not very convinced that 7% increase sequentially, and you're saying that net profit was down largely due to the depreciation. But even that said, there's no consistency in earnings for the past many quarters, except for before the company went public. That was when you were seeing consistent profit quarter after quarter, and after the company has gone public, you're not seeing the same kind of numbers.
I think, Santo, that is also down to the fact that in the past year, the company has also invested a lot, especially in its fashion business. Now, I was checking, how Nykaa went about investing the money that it had raised from the public investors. Now, if you look at the portion of, the sum that has gone into its subsidiary, actually, the portion of sum that has gone into subsidiary from the IPO proceeds are actually very low. Most of the IPO proceeds have largely gone towards promotion costs, marketing costs, or towards repaying the debt that it wanted to repay, the outstanding debt that it had. But largely, I think it has farmed back a lot of its own profit into a subsidiary instead of utilizing the IPO proceeds. And I think that is one of the reasons why we are seeing the decline in profits and an earlier decline in margins that got analysts a little worried that how suddenly the company's margins are going down. So I think this is a very sound strategy that the company is trying to get into. They believe, they are firmly of their belief, and the conviction is right in thinking that they can utilize their surplus or their net profit and farm it back into or invest it into their subsidiaries, and because probably they are very confident that the growth will be rewarded in the long term.
My argument against new age companies is very simple. Typically, when you have stocks quoting at very high valuations, usually, like you see in the case of FMCG companies, those stocks trade at very high multiples. But in that case, you have a definite moat for each of those businesses. If you look at, be it Colgate Palmolive, ITC, Nestle, any of these companies, or Britannia for that matter.
Yeah.
So those high multiples are justified in a way. When you look at many of the new age companies, there is no distinct moat. It's a very fiercely competitive space. For instance, the one in which Nykaa is present at the moment.
Yeah.
So why would you then, unless you then see it in the earnings, at least the top line is growing at that blistering pace, which is also not really the case, CJ. So I am a little skeptical about the way the market is valuing it, and that is seen again in the sustained underperformance of the stock for the last many months now. It's technical factors which is probably keeping sentiment subdued, but once this is out of the way, again, my bet is that probably you could see the stock again slipping into a trading.
I think, Santo, we will only get the clarity probably in December onwards when the share sale is done and over with. That said, what is the next stock on your pick?
Well, Escorts Kubota, the October numbers have been pretty strong, almost a 20% increase in domestic sales and total sales. Now, in the case of Escorts, the company had already guided that the October numbers would be, September numbers would be, I beg your pardon, the October numbers would be pretty strong because of the festive demand. Now, the first quarter numbers of the company was a big disappointment, and the margins shrunk very sharply. Escorts is into 3 lines of business, but the main one is still the tractor business, and that's the bread and butter. So it's the performance of the tractor business that the market is watching closely, and there the margins took a huge beating. The price hikes by Escorts did not play out well. It hurt demand in a big way, and now while the sales are pretty strong, the market will be watching out whether it has now come at the cost of margins, which is why probably you're not seeing a huge run up in the stock price, though the company's business updates and all have been pretty positive. It's still hovering around the 2,000 rupee mark.
Yeah, I think, Santo, overall, if you look at the past 8 to 9 months, I think the outlook towards the entire tractor space itself has become a little muted. Even M&M, which is the largest player in the tractor space, even the outlook for its tractor business is not that great. The stock, of course, has been performing quite well on the back of the strength in the automotive business, but the outlook for tractor sector in particular seems to be quite muted, and that is largely down to the impact that we have seen, say, of inflation on rural income. Farm income at this point of time is actually below, or the rate of growth of farm income is actually below the current rate of inflation. So clearly, I think the demand out there is very, very questionable. That said, the higher than expected performance that we have seen in October in terms of sales volume for Escorts would provide a little bit of incentive to investors that probably at least the company is trying to play the volume game. Now, even if you sacrifice profitability, the only other way you can offset it is by gaining market share. And I think that will be very key. Whether Escorts has been able to gain market share at the expense of losing some of its profitability, I think that will probably be the next trigger as far as Escorts is concerned as a stock. But if there is no gain in market share and you have also ended up losing or sacrificing on margins, then it could be a double whammy for the stock going ahead, Santo. Well, the last stock on my radar today is from the sugar sector, and this is Balrampur Chini. A lot of interesting catalysts happening today for the company. The stock rallied earlier in the day on the reports that the government was all set to raise ethanol blending prices. Basically, the price at which a sugar company like Balrampur Chini would sell ethanol derived from sugarcane to oil sector, basically your PSUs, OMCs, who utilize this ethanol to blend it with the crude oil and basically meet the government's target towards ethanol blending. Now, the jump in prices, there is an expectation that prices could be hiked by as much as 10%. Now, if that does come through, that will clearly add to the revenues of the company. We know that volumes for ethanol at this point of time are very, very strong, and with the government expecting to raise the ethanol blending target from 10% currently to almost 20% by 2025, you know that demand is going to be very strong, and with prices also rising, your overall realization becomes very, very good. Apart from that, the company today actually has announced that they are going to consider a share buyback. Now, if you look at the past 5 years, they have already announced 4 share buyback, Santo, and that has reduced the equity base of the stock by almost 20%, and therefore, optically, in a way, it has helped the stock perform quite well in the market, and I think that will continue, and investors are getting rewarded through that share buyback. So overall, looks like a very good setup for Balrampur Chini. We have to wait and see how the earnings also come out for the second quarter, but the stock is looking quite good.
Well, the overall sugar sector in general, now this ethanol story has been doing the round for quite some time. It's not something new, and incrementally at the margins, the government has been trying to increase the selling price as well as the proportion of proportion of ethanol that is blended with fuel. But if you look at the performance of sugar stocks, they have really not gone anywhere. Now, Balrampur Chini in particular was doing quite well till about April, when the stock price jumped in a big way. But the moment you had policy uncertainty, which is the government taxing steel companies and putting restrictions on
sugar exports as well. There were
sugar export, that was also there, and that is when the market completely, the sector itself fell quickly out of favor. Now, this is a sector, I think, besides the fact that you see fair bit of volatility in the earnings of these companies, policy interference is something that seems to keep investors on the back foot. And that is why
it's a politically sensitive sector as well, so that has always been a risk.
So this is a sector which one has to play very clearly. One has to just ride the momentum, and one can know that only in hindsight.
But Santo, and this is quite funny actually. If you remember the rally in sugar stocks between probably August of 2021 till April of 2022, those 6, 7, 8 months, the most of the rally was driven by the fact that the ethanol blending capacity was rising. There was going to be greater demand from OMCs for ethanol, and therefore sugar, from becoming a cyclical sector, was quickly becoming a structural story. And a lot of analysts and as well as market participants till this date hold on to that view that sugar is slowly and steadily becoming a structural story instead of a tactical bet that you take when the industry dynamics are in favor of the companies, and then you sell out when the dynamics have turned against them. So it's a very interesting sector. I think it will be very crucial to track this sector over the coming years to see whether it's becoming a structural story, say in the same vein as specialty chemical has become in the past 5 to 7 years because of replacing demand from China. So in that sense, it's a very, very critical and a very interesting sector that is shaping up in front of us.
More than anything, one should be bullish on sugar just for one reason, because Indians by nature, most of them have a sweet tooth.
Yeah. Absolutely, absolutely. And our lifestyle choices are not that great also.
At least not for the time being. Well, last stock on our radar this afternoon is Whirlpool India. CJ, pretty disappointing set of numbers, and this is one stock you have batted for in the past.
I will still bat for it.
You'll bat for it again. Now, if you look at all the three main parameters, be it revenue, be it margin, be it net profit, all are under pressure. And this, even when you compare it on a year-on-year basis, where typically most companies have been doing well coming from a lower base. That doesn't seem to be the case with Whirlpool India. So, CJ, straight up, I would like to hear your defense on that.
I think, Santo, for me, and I think market will also probably agree on this, and this is what the point of view of a lot of analysts as well was, that the second quarter would be the trough of earnings, the rough patch of earnings that Whirlpool has gotten itself into over the past year. The main reason why the earnings performance has been so bad is largely the higher raw material cost that it was facing over the past year. And of course, white goods demand also took a beating because of the return to offices trend. When people were working from home, there was a surge in demand for white goods, especially washing machines and, refrigerators and whatnot. But because of the return to offices, that pent-up demand has now gone away, and we are seeing a bit of a normalization as far as the sector is concerned. But going ahead, sequentially, there is an expectation that the raw material prices that have corrected very sharply in the September quarter, that will start percolating now into the earnings, and therefore you could see an upward swing as far as profitability is concerned in the second half of FY23. As far as volumes are concerned, volumes will start picking up from FY24 onwards, because let's not forget that India is still a growing story. It is still a very rapidly growing consumer discretionary story, and there is expectation that this is a long runway as far as demand is concerned. So I'm not really worried about the rough patch that earnings have hit over the past 1 year. But overall, I think from a structural point of view, this is a story that is still investable and not uninvestable like China.
The stock has also been through a rough patch for a very long time, but again, it has not really reacted to the disappointing set of numbers.
And I think that is probably one of the reasons why the market is probably trying to look past this week earnings and maybe await what happens in the Q3 or Q4 going ahead.
And that is my friend CJ, ever so hopeful about everything in life.
Absolutely, Santo. And shall we take a quick update on the market? I think the market at this point of time is doing decently.
It had almost come again close to reaching crossing the 18,200 mark, but is stopped just short of that. The Sensex is up over 300 points, Nifty at 18,150.
And Santo, if the mid-cap, the small-cap space actually has made a decent recovery. It was down and out earlier in the session, but clearly the Nifty small-cap 100 index now higher by about 0.3%. So trying to catch up with its large-cap peers. But sectorally, I think that is where the news is. Almost all the sectoral indices on the NSE is doing quite well at this point of time. The Nifty Bank Index higher by about 0.6%, Nifty Realty higher by 0.4%, and Nifty IT up almost 0.7%. But the only weak sector at this point of time, actually the sector that has made the most impressive comeback is Nifty Metal. If you look at the Nifty Metal Index, the Nifty Metal Index at this point of time is higher by 2.3%, and that is largely on the rumors that are coming out of China that probably the Chinese government is done with its zero COVID policy. And I mean, I think the world would be glad if that was over, because that means that finally we could start seeing some bit of rejuvenation of the economy, that is China, and given its status as the largest commodity producer, that will be very, very critical for a lot of Indian metal companies.
Well, that can be a recovery in China sometimes is a double-edged sword, which also means that they produce a lot of steel and other metals and dump it in the rest of the world.
I think those days are gone, Santo. That is largely because of the very stringent environmental policies that China started bringing back in 2017 and basically roughly after the Paris Accord of 2015. So I think with that accord being there, and China trying to move away from, the dirty tag as far as environment is concerned, I think productions, even if they do rise, I think they will not go back to the pre-2015 levels. I think that is now a story of the past. And therefore, the replacement demand in terms of India trying to replace a lot of these Chinese producers in the global market, I think that could still continue going ahead.
And CJ, what are the key earnings now left? I think most of them are behind.
Yeah, most of them are behind. But tomorrow, of course, we have M&M Financial, Dalmia Bharat, and a few of the other companies, smaller mid-cap and small-cap companies coming out with their Q2 earnings. So that is something that the market will watch out for. Apart from that, investors will be awaiting the US job openings data later in the evening, as well as the ISM manufacturing PMI data for USA for the month of October, critical indicators in terms of how the job market is doing and how the manufacturing side of the economy is doing. And lastly, of course, you have investors will be reacting to earnings of some critical companies, big companies like Tech Mahindra, Adani Ports, as well as UPL. Of course, UPL's earnings just came in before the market hours, but Tech Mahindra and Adani Ports earnings will come likely after the market hours, and therefore tomorrow morning the market will be reacting to those.
Well, and with that we wrap up this edition of Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.